Quite fascinating to see the euro-dollar play. I think let's start off with that because we've got the euro gaining around 0.6% against the greenback. Very much a different picture to what we saw yesterday. We still have bond yields rising extensively in Europe. What has changed today? Do you think the PMI number adding that boost in today's session?
I think there's just lots of uncertainty in the whole euro region. You've got incredibly strong economies like Germany doing well, and then you've got the southern economies which are struggling. And I think this volatility is going to persist with us. So on headline news such as Greece defaulting, you're going to see the euro suddenly take a negative performance. And then with the potentially negative headline news of America being put on a negative rating watch, you saw the euro actually do well. So I think the euro is just broadly trading in a large range, and I think that we can continue to see that continue going forward until we get a lot more clarity in terms of bailouts and where we're exactly going in terms of global economies.
With regards to the local currency, despite all this volatility within the gold price, within the commodities picture overall and the debt scenarios that are playing out, the rand has held up quite well. What is propping up the local currency at this point?
On our trading desk, we've seen phenomenal two-way flow. We've seen good quality flows on both the importer and exporter side of dollar rand. And as a result, I think that stabilized us. People who saw the currency come off from 665 got an opportunity to get back in at the high 80s. And now that we've seen people selling into that, we've seen some oil companies come in today and buy some dollars at the low side. So I think there's good two-way trade here, but fundamentally I think the rand's going to continue to do well. Commodities have generally shown resilience and do well, and gold's doing well, platinum's still doing well, and South Africa Inc. generally on a trade basis is doing well. So I still see the rand continuing to do well as global investment savings gets allocated to us.
Would you say that South Africa, and one of the things that is luring in those foreigners is our yield differential, and just doing some of the maths as well. When you look at the inflation rate in South Africa, we're sitting at 3.7%. That number is set to come out, in fact, tomorrow. So CPI should be jumping to 4% in March. We've got a repo rate of 5.5%, so which means we've got positive real rates of around 1.5%. Is that 1.5% luring those investors in? Is that what we could say is causing rand strength?
I think the real rate argument has many dimensions. The central bank themselves look at it in many aspects. You could focus on spot inflation, you could focus on core inflation, you can bring in the Taylor rule, you can look at forward-looking inflation when determining what is a real rate. But in the context of the globe, there's two things that are bringing foreigners to our market. One is the absolute level of nominal yields, and that's beyond spot yields or beyond the repo yield. They're still very attractive, and most people benchmark themselves against the JP Morgan Emerging Market Bond Index, and the weighting there is about 10%. So any meaningful inflows into emerging markets means that South Africa is going to be a beneficiary of those flows. And we see, and we continue to see in the future, more money being allocated out of the developed world into emerging markets. And as a result, South Africa has to be a beneficiary of those investments.
Let's touch on how long this could continue. I mean, with regards to quantitative easing, and one only has to look at what's happening in the Eurozone at this point. The ECB has actually started to put brakes on purchasing bonds. This then has resulted in much higher bond yields over the past few days, and we know it's also got to do with the restructuring and worries about coming through on Greece's debt as well. Once we stop seeing that excess liquidity, does that mean that we'll see a drying up of money that is going to be allocated to South Africa and overall emerging markets?
I think there'll be a knee-jerk reaction. In the short term, you may actually see that happen. But in the medium to long term, given that global growth is going to be sustained by emerging markets, you're going to see global capital continue to be allocated to emerging markets. So in the short term, it's possible to have a retracement, but I actually foresee in the long term the rand doing well.
With regards to the next couple of days, we've got public holidays, squaring off positions when it comes to the local currency. Can we expect that?
I think risk is very light across the street. I think globally people haven't allocated anything near their risk limits. I think people are very neutral, and I think we're already at the point where risk is light, and it's been like that for over a month.